Good morning, everyone. It's 8:01 a.m. on Monday, the 31st of October, 2016, the last day of the month. Thanks for joining me for another Trader Bite session. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. In the overnight, overall, seeing a mixed market stance with crude oil leading the futures sector down as far as the futures that I watch, down 133 basis points, 65 cents on news that the non-OPEC producers would not commit to OPEC output cuts, and the OPEC producers still not agreeing on what the supply will look like. And so it has bounced back up a little bit, but overall it is gapping down. The crude oil is gapping down versus Friday's range. Um, this is followed by the Euro stocks 50 of Europe down 50 basis points. The Euro, the British pound, the Japanese yen, the DAX, and then gold, and the rest are slightly up. The S&P has pushed its overnight high to 2130.50. Remember, 2134 is where the sell-off on the Hillary Clinton email FBI investigation news. That's when it came out at 2134. We got pretty close to returning to the scene of the crime, which is what's expected on this news. The expectation on something like this is that the market will likely bounce back. It's not market or economy news or permanent news, so to speak. It's the drop on Friday's more speculative or protective. In the overnight session, also, Europe came out with its advanced GDP came in at 0.3% in line, and the PCE deflator came in at 0.2%. So in the U.S. And so overall, the market is again mixed, and that's what we're heading into. Remember, it's Monday. Monday is one of the lower volatility days of the week, with Tuesday being the highest in recent study. So that's what things look like. Let's have a quick look at what was expected for Friday. Friday's Trader Bite. We had anticipated an open, or at least we were trading around 21.27 on Friday when the Trader Bite was going on. The expectation is for us to start with a test lower, and then looking for buyers to step in somewhere near Thursday's low for a push to our key target of 21.35. 21.35 is the most traded price by volume in this consolidation zone that we're in currently. So you can see it's right here, this pink line. Okay, the secondary hypothesis, and that was supposed to finish us off for Friday. Friday, given that it is a Friday, a lot of the action just occurs right before the European Open, and it just dies out at approximately noon Eastern. Hypo 2 had us pushing off of the open, a quick open auction in range, and then pushing off of the open for a test of the prior day's point of control, and then rotation down and out of yesterday's range to continue lower. Remember, the prior day had closed near the lows, so there was a chance that we would start to push lower. The expected target was 21.20.50, the naked point of control. If not, then it would likely push down to 21.17.75, retesting the prior week's low again. Here's what actually happened. So we opened right in here, 21.27 and a quarter, just not far off of where the Trader Bite price was. And here's the test down, as I showed in the plan. There's your test down right there, and then the market found its buyers. You could see that buyers stepped in pretty strong right here, 21.75, just 3 ticks below the prior day's low for a strong rotation up, pullback, and then we have another strong rotation up through the prior day's point of control. And where do we go? We go to 34.75 first, pull back to the initial balance of 31 even. It went to 31 and a quarter right there, and then it pushed right to 35 and a quarter, pushing that point of control by a tick, 35 and a quarter. And then that's when the news, the Hillary news struck, and the market rotated down to 21.19 very quickly, dropping 15 points in a heartbeat, and then consolidating to process. And then we have the continuation. So this is the impulse, pullback, consolidation, continuation trade. And then we got an additional continuation down to 21.1250. I didn't expect this down here. And then the market started to work itself back to the open. There it is at the open, and the opening swing high, and then it consolidated from there and just sat into the close. It closed at 21.24 even. So what we had on Friday was basically hypo 1 to start. So this was early on. We had hypo 1, and then we rotated down to hypo 2 on that news. But most of the action was taken over by hypo 1, and the market was auctioning normally at that point. The news disrupted the flow and has essentially put us back lower. The market overnight has pushed has pushed lower on the open, and then rotated up and held higher prices. We've been above the mid almost the entire session, the overnight session showing strength. So here's the open, and it rotated. And it rotated, that's odd. What is that? Yeah, okay, so I see a little flush on the open here, right there on the opening bar. It's kind of odd. But overall, it just rotated slightly down, and then it has pushed up and is holding these prices. It has not taken over the mid. It is basically accepting 21.27 area Friday's open as the value in the overnight session, and it's remaining up here. It looks like it's consolidating. It's forming somewhat of a box here. And we'll see how that ends up playing out. The expectation is it's likely to continue to push higher on the open. We'll see how that works out. It could go either way. Again, the underlying market is mixed this morning. Let's take a quick look at the week just to see where we are overall. Note that this was last week's bar right here, this red bar. This was the prior week. Very tight week, the week before last, and we are still inside of the week of the 14th, the week ending the 14th. We are trading the last week and the week before traded inside of 3 weeks ago, the week of the 14th. And we have not broken that range at all. So we had a big drop on the week ending October 14th, and we have been stuck inside it for 2 weeks now. I expect us to break away from here. I see a clear downtrend line on the weekly from the high of 21.85 even, sloping down, and I'm still looking for what it's going to look like from below. Is it going to be a wedge type of formation, or are we going to start forming a trend channel on the weekly, pointing down, the key figure below being 2092 and 2082 if it starts to push lower. But right now on the weekly, this is how things are shaping up. We're really not going anywhere. You notice that the trader bites last week, there's just nothing new to mention or price in. It's just the same coming in, day out. It's the same churn every day. Again, here it is. This is the drop. So the week of the 10th to the 14th, we dropped. We ended up finishing with a balanced profile in the middle. This balanced profile puts us right in the middle of the 32 area, 2132 area. and then the week following that, we pushed that up higher to 21.36. Combined, we have a point of control at 21.35. So we had a big drop, an impulsive move down on the weekly. Then we have an inside day, an inside week the following week, and then last week we had an engulfing week, which was a bearish engulfing week. We opened near highs. We open up here and we closed down here after testing lower. So if this is to follow the normal pattern, assuming no news, we're likely to eventually take out this 2107.75 for a test below. So that's how things are shaping up. It's really a tough read right now. So if you feel confused about what it's trying to do, it's because it's gyrating in the same spot over and over. Here's how the daily looks like. So we have a very clear composite profile in this region. The composite profile here starts on the July the 8th, and we have an upper distribution. We have a middle distribution, which has a point of control of 52. Let me pull up the point of control. Yeah, 53. And then we have a lower distribution, and we're stuck in this lower distribution, have not been able to move off of it for some time. Okay. So that's how things are shaping up on the bigger picture to set us up. As far as the week ahead, um, a lot of the numbers that were expected this morning were released this morning. We're expecting Chicago PMI, which is a mover, has been a mover of the market, and that's supposed to come out at 9:45 Eastern. At 9:45 Eastern. Remember, Europe this week is off by an hour, so all the times on your charts and anything that's coming out of Europe is going to be off by an hour. As I had mentioned in a tweet last week, that they end or they start no they end daylight saving time a week before us. So we're going to be off by an hour, but at 9:45 Eastern, Chicago PMI gets released to the public. Remember that number gets released early, and it comes out at 8:42 or so, or 9:42 or so Eastern for subscribers. The expectation is 54 on that. But the rest of the week, the key release is, of course, we have two major releases this week, so it's likely to create some volatility, some choppy trading, and some volatility. The key release this week, of course, is a 2 o'clock Fed rate, FOMC rate decision on Wednesday. Wednesday's a big day, and then because it's the first week of the month, we have the non-farm payrolls and the unemployment figures on Friday at 8:30 Eastern. So it's so far we're expecting 165,000 jobs for non-farm payrolls on Friday and 160,000 for private payrolls. So Wednesday and Friday are really key, and watch out this today for the Chicago PMI. Let's switch gears again and go back to where we are now and what our expectations are for today. Let's expand this. This seems like a very noisy chart, but it is a noisy area. So here's the move, the Hillary move, and the pullback. And right now, the market is basically trading at 25.50, just above the close on Friday. The overnight inventory is fairly balanced. So the expectation in the morning is, guess what? The same as always, the same as when we open inside of range, inside of value. We are expecting an open auction. The expectation is we're likely to push lower and make an attempt at pushing down towards 21, and then I expect it to push up and then return and resume its auction to 34, 35, pull back, and then try to push through Friday's high. I'm expecting the day to have an upward trend given the action that we've had. That's the higher probability. The secondary probability is that we open in an open auction, we wave around, and then we finally finish by pushing up, and then I'm looking for the high to be broken, for the LVN to be tested right up here, and then I'm looking for it to start rotating down towards 21, pulling back, and then pushing to value low down here in the 2117 area. That would be hypo 2. There's not much I can offer as far as insight into this area. We've traded the bejesus out of this area. It just isn't. The market is not finding anything to reprice currently. It's in a holding pattern. It has been despite movement elsewhere. It's still holding in the same spot and gyrating over and over in the same place. I had some words of wisdom, but it's Monday. It's already a long broadcast. I'm going to cut it off here. A few things to remark about your expectations of performance. People, I think, miscalculate what they should expect from their day-to-day trading. The expectations are a lot higher than I think they should be. We'll talk about that some other time. Good luck today. Mind your risk, and just your first effort is to keep yourself in the market, and you cannot do that without paying attention to how much you're risking on every trade. Good luck. Take care.